Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for Tuesday, November 17th, 2020. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the president and founder of Simple Market Signals at simplemarketsignals.com. Today, the S&P 500 was down 48 basis points, so just a little less than 0.5%, and we closed at 3609.53. So the first thing I want to point out is this is the second time in history that we've closed over 3,600 on the S&P 500. The first time, of course, was yesterday. And so what we're looking at here in this chart is a 2-day, 2-minute candlestick chart of the S&P 500. So each candlestick does represent 2 minutes of trading. And what we can see here for today is we gapped down at the open. This dotted blue line is where we closed yesterday. So this is the last 2-minute candle from yesterday. So we gapped down at the open. We made our lows of the day today right at 10 o'clock and then traded higher for most of the day. And then we peaked, as you can see here, about 2:45 in the afternoon and then sold off into the close. Again, down 48 basis points on the S&P 500 today, and we closed at 3609.53. The next chart that we're going to look at is a 1-month hourly candlestick chart of the S&P 500. So each candlestick on this chart represents 1 hour of trading. I have a few annotations on this chart that I want to share with you. The first thing I want to point out here is this uptrend line that we had intact that started at the end of October, and it was a pretty steep ascent angle, and I drew it very conservatively here, just connecting these two candles, as you can see here. But we broke this uptrend last week, and then we've been basically trading sideways, okay? So remember, the market can only do one of three things, right? Up, down, or sideways. And so really for the last, since last Monday, we've been going sideways. And this blue line here, what I did is I connected the high points starting on Monday the 9th, and this was the opening candle. And this, the P stands for Pfizer, and the M is for Moderna. And of course, both of these companies have given us the last 2 Mondays in a row, yesterday and last Monday, they've given us positive news on the vaccines that they're working on. What I think is interesting here is even though Moderna, I believe, has just my thoughts on this is the news out of Moderna yesterday was as good or better than the Pfizer news, but yet we're now trading in a downtrend, okay? So stick with me and this will make sense. What I like about the Moderna news over Pfizer is, and I am not by any stretch a virologist, I have no background in medicine, okay? But here's what I know and here's what I understand. The Moderna vaccine has even a higher efficacy rate than the Pfizer vaccine. The Moderna vaccine can be, my understanding is, can be stored in a regular refrigerator, where the Pfizer vaccine has to be shipped at, I believe it's either 70 or 80 degrees below zero. So there is some infrastructure problems perhaps with the Pfizer vaccine, where Moderna I believe is going to be a more user-friendly vaccine. So with that said, and considering the fact that it's going to be hard for this market to continue to go up here unless we have other catalysts, right? Other positive news factors, at least in the short term. The fact that we have lower peaks here, starting with the Pfizer news about 6 days ago, tells me that we've kind of ran out of juice here for at least a little while, okay, that we're peaking. Now, I don't, I'm not clairvoyant, all right, but I'm just using statistical probabilities and looking at the data. We had this really steep ascent angle. We have broken that ascent angle. We're having lower highs based on really good news over the last 2 Mondays. We've been trading sideways for over a week now. So, just all of that connected, guys, I think we need to be a little bit cautious here, okay? Because the market just can't go straight up every day. Now, hopefully you're staying with me here on my analysis and what I'm thinking here. Now, so if we have peaked here, maybe we will just go sideways for a few weeks, and that will be enough to allow the market to go higher. However, I think the more logical analysis would be to pull back here a little bit. Now, the short-term, really short-term support level is now at 35.25, this blue line here, and there's not a lot of support here. On these hourly candles, you can see that we had some trading on November 5th, right up to that 35.25 area, and then we had some support over the last couple of weeks at 35.25. All right, so if the market rolls over, the most logical first stopping place would be 35.25. If that doesn't hold, then 34.20 is the next area of support. And this is a really short, it's about a 1 month chart, so it's not going to give us all the data. You can look at some longer term charts, go back and look at my videos from the last couple of weeks where I've talked extensively about the 34.20 and 33.30 support levels. So those would be the other two areas to watch for. So if we are rolling over here, again, we might pause at 35.25, but I would almost be surprised at this point if that holds. The most logical place for us to pull back to, I think, here is 34.20, and if that doesn't hold, in 33.30. So this is what I'm seeing in the charts right now here, guys. You know, again, it's a very news-driven market, so if there is some positive news about something, some other catalyst that's even better than what Pfizer and Moderna have given us over the last couple of weeks, and I can't imagine that because both of these were really, really good news items over the last 2 Mondays. But if there is some catalyst that's out there that's positive, yeah, we could continue to go higher here in the short term. But it does appear that the market needs to take a break here. We have broken this uptrend. We're now going sideways to a slightly downward angle. And again, 35.25, that's the short-term line in the sand. If that doesn't hold, 34.20 would be the most logical next place for us to go down to. Do you know the level of risk in the stock market on an ongoing basis? Simple Market Signals. It's like having risk radar for the U.S. stock market. Simple Market Signals is less than $20 per month. Simple Market Signals is for financial professionals and individual investors. What is it costing you to not have this information? To get started, go to simplemarketsignals.com.